40, verse 31. But they who wait for the Lord shall renew their strength. They shall mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand.
Good morning, everybody. What's up, Tony? Yeah, hopefully you guys have had a good couple of months. Last week was pretty spectacular, if I do say so myself. Yeah, I mean, sometimes everything just clicks, and last week was pretty dynamic, right? It broke through every one of the targets that we've been looking for. The levels of validation, right? I called this as a balanced price range. It did so, which we'll get into that in a little bit. But yeah, so how's your guys' this weekend been? Let me know in the chat. What's up, Tony? Anyone else that watches this replay? Let's just put some stuff together real quick. Yeah, can y'all hear me okay? See everything okay? Still one in the chat. I woke up late today. Ugh, hate when that happens. I was super tired yesterday. It's freaking hot over here where I live. Definitely not a desert type of person. I like cold. But some days it's hot as hell. Yeah, let me set this stuff up. First and foremost, for those that may be new and don't really know what to expect from these calls, pull this up real quick. This is how this call is going to go in this order. Right, so if you've never been here before, this is what you can expect. Okay, we go from just overall framework, news, we try to like discover what could happen, just even without looking at the chart, because you can have an assumption as far as what can happen before you even look at the chart. You just have to know what you're looking at and what gives you the ability to do that. But we're going to talk about higher time frame analysis, talk about news. Maybe we'll talk about a little bit of what's happening in the world, how that can affect the markets. Then we move on to bonds and yields and DXY. The bonds dictate where the foreign currencies and the indices are going to go, or has a heavy influence. And it's got a reverse influence to the dollar. The yields positively impacts the dollar, basically a positive correlation, and a reverse correlation to the other assets. The way that we do things obviously start from the higher time frame. We map out liquidity, close PD arrays, make an assumption as far as what the most likely draw on liquidity will be on that higher time frame. That sets the stage. We kind of identify the range of opportunity that we're in, or the dealing range. And of course, the most important thing, once you look at the chart for the first time for the week, right, to prepare, even if you're on the day that you're trading, the current candles range, high and low, and the previous candles high and low, whether that's a monthly chart, weekly chart, daily chart, right, with monthly, weekly, or daily candles, those are still the levels that are the most important, the most significant relative to whatever time frame you're looking at. So, we'll get into that. Obviously, we do it every week, but we'll point that out. Obviously, we are very anchored in Power 3 and market maker models. Those are just like the foundational pillars. And then, of course, we have a lot more that we talk about other than just that. But honestly, those two frameworks and then understanding this process that we do every week, you set yourself up to have a really, really good chance to be pretty accurate and have clarity, right? Because without clarity, you can't be profitable. Without clarity, you can't even be consistent. So that's the main goal here, is to get you guys clarity, so then you can walk on your own at some point. There's lots of students that have taken this information that I talk about, both here in this medium and in my private group, who have done pretty well. It's all dependent on how much you apply yourself, whether you ask questions, whether you are serious, whether you back test, whether you do what's told to you to do, or not, right? It's a very heavy deciding factor as far as whether anything's going to work for you. It doesn't matter about this stuff that we do, for any mentor. If they know what they're doing and they're teaching you, you should listen to what they say. At least investigate it. See why someone's talking about a certain thing, and then you could discover if it's for you or not, right? And of course, if you guys have any questions after each segment, I'll answer questions after this initial conversations had about news, seasonality, and whatever else I look to add. I'll let you guys ask questions. You can always ask questions at any time, but I'll more so get to them. So this is a timely call. It's not just like all over the place. So, and of course, like I said, after each segment, you can ask questions, or you could just throw them in, and I'll look at them after the segment's over with. Okay, so keep this stuff in mind, and we'll just get right into it. Okay. Do you guys have any questions before we get started? What's up, Fancy, George, Tony, Mike? Yeah, let me know if you guys have any questions. If you don't have questions, throw one in the chat so I'll get started. And you guys can hear and see everything okay, right? Tony said, I got greedy and got my face ripped off. That's not good. But hey, it happens. just try to learn from it, figure out what exactly led you to, whatever the event was, and look at it as a positive thing, because now that you went into drawdown, the market has now given you one of the best opportunities to prove to yourself whether you know how to get out of drawdown or not. That's one of the main things that only losses can provide you. And if you think about it from that perspective, losses aren't necessarily a negative thing, especially if you're pretty new, like less than 3 years experience. You got to learn the skill of drawdown recovery. And if you don't have the ability to do that, right, or you try to aim for perfection, and then every loss is like an earth-shattering event, or every win, excuse me, is a super like high experience, you're going to be all over the place and it's going to suck, But if you know how to get out of drawdown, you should have a section in your journal specifically for times where you got out of drawdown. So like you can call it like I call it drawdown recovery examples. I take a screenshot if I ever do anything wrong, if I go into drawdown, if I finish the day or a couple days red. And then I take a screenshot. I just describe the situation to myself, and I lay out my plan to recover the drawdown, which is just simply dropping your risk after you take the losses. If you hit drawdown, drop your risk to slow the bleeding, so then you can get it back and your equity curve doesn't look so wild like a roller coaster. Because nobody is going to want to give you their money to trade with, even prop firms. They'll allow you to, but you're not going to have the options that many traders that are disciplined, that work with prop firms, can have. But aside from the prop firms, again, having something like this, you're making a dedicated space specifically for recovering out of drawdown. And again, that's a skill set that you need at some point. Eventually, you're going to have to be good at it. Eventually, you're going to have to look at losses as nothing. And the only way you do that is by keeping risk at a minimum, never over trading and over leveraging. Those two things right there, taking 1 to 2 trades a day and never over trading or over leveraging, and dropping your risk after you take a loss, that right there, in my opinion, is one of the most simplistic, effective, mindset shifting and, safe guardrail type of risk management that is in the industry. It's very simple. It's very, very effective. And, your over trading and over leveraging issue immediately gets put to halt, right? It just completely stops. And then if you stick to this, you'll notice over the next months, over the years, that you can do this and it doesn't have to be so stressful. You'll notice how effective and useful it is, and how easy it actually was to stop over trading and over leveraging once you have faith in the risk management protocols that you employ related to this. It's just one of those things. It's the number one thing that, when traders come to me and they're struggling, they're looking for help, it's the number one thing, from at least from what I've been told over the years, that really helped them get back on the horse. I have a student named Sebastian who used to over trade and over leverage. It seems like he's withdrawing money every week or so. Those of you in my private group know. He was talking about it the other day. But it's incredible. He highlights also the fact that, he's highlighted it a couple of times, that the 1 to 2 trades a day, although he does break it sometimes, it's drastically stopped him from blowing his accounts, losing funded accounts, and being able to keep the money. Because it doesn't matter how much you make, it's how much you can keep. You can make $1 million, but if you can't keep even $1 of that, because next week you're risking it all, and you don't have a plan, then you're not going to be able to succeed. You can't succeed if you don't have your risk under control. And again, there's very simple things that you can do to make adjustments, and it's very, very worth it. And if you haven't tried this before, and you're thinking, oh, this or that, like it's going to take too long to get out of drawdown or blah, blah, blah. Just put that to the side and just give it time, right? Give it the effort to see if what's being talked about, this different approach, can be actually beneficial to you. You'll never know until you try. You could think one thing, but real time, it's different. Mentally, you can't just assume what it's going to do in the moment, right? When you take a loss or on a win streak. Yeah, and the rules are super important, and they decide whether you're going to be able to keep money or lose it all every single time and be hit and miss. Hit and miss is not profitable. Making money all the time, but then losing it all within the same day, same week, it's not how professionals operate. It's not how the best traders operate. And if you do want to give yourself a little bit more space so you can take a couple of trades, like 3 trades instead of 2, then you start off early on with lower risk, right? If you trade 5 contracts, trade 2, right? Or 1. And then as you gain more confidence in the price delivery, you could then look to kind of adjust to make it a little bit more aggressive, with the risk. But never go over whatever your set risk amount is that you're willing to lose. I don't recommend risking 1% for most, unless you've had at least 3 years experience and have proven clarity to yourself, not to anyone else, but to yourself deep down, honestly. And unless that's achieved, unless you could honestly say that that's the truth, you shouldn't be risking 1%. You should risk a little less because you're trying to get your footing. You're trying to get used to being able to trade. You're trying to be consistent. And if you're constantly worried about the money, you're not going to look at the things that are actually important, like order flow. How are the PD arrays reacting to each other? How is liquidity being treated? What liquidity is there? Where could price be headed? What are the other assets doing that can support your idea? What are things getting inverted? Are wicks 50% levels when price trades into them? Is that being respected, or are they being violated? All these things are stuff that you got to pay attention to. And of course the news as well. But, if you're just worried about the money the whole time, that's all you're going to be focused on. And the more that you press and focus on, I need to make money, the further and further this goes. It gets away from you more and more and more. So this is very important. People don't like to hear this. Doesn't sell courses, but I'm here to help. It's just literally the only reason I'm here, and even have a private group. So yeah, don't forget to like the video, guys. Subscribe to the channel if you get value. Appreciate you guys always hopping on. Again, if you guys have any questions, just let me know. But yeah, we'll get started now. So Sunday and Monday within the weekly Power 3 is generally going to show you characteristics of accumulation and manipulation. And then going into Tuesday or Wednesday, if the manipulation's tagged some liquidity pool after it ran away against the sell side, if it's running up like that and there's a PD array or liquidity pool on like the 1 hour, daily, 4 hour, that you can anchor that run to, you could use that to position or at least anticipate the smart money reversal, the reversal / smart money reversal, or expansion from whatever that PD array is for the Power 3 on the weekly chart. And when you can identify that, it's just another one of those things that's very helpful. And you can kind of get a feel for what could be expected for the weekly range when you look at the news events. Sunday and Monday, there's no news, so that's a low probability. Can there be moves? Is there moves? A lot of times there is. We are in the last week of March, right? And we're in the start of the second quarter, my favorite quarter. It's the most dynamic one out of all the quarters. Most big traders, they make their money in a particular time of the year. All the other times are just like management and keeping risk secure so they can lock in their money. Some traders like us, right? We're able to go in there at all different times of the year and find stuff. But a lot of times during the second quarter, it's super dynamic. Just you guys want to keep in mind too that the week before, week of, and week after the quarterly rollover is generally low probability, according to ICT's lectures and things that he's talked about related to this. So you want to just keep your risk low. We have wars and craziness going on in the world, so that's another reason to keep your risk low. I haven't been risky 1%. Normally that's my baseline because I've been doing this for a while. Max is like 2.5%, but I have not pushed it like that this year. And depending on how this quarter unfolds, right, this next week, right, that's about a hit, and then the week after that, depending on what the overall market sentiment looks like across all the assets, not only just the NASDAQ, but across all the assets, that'll determine whether I'm willing to put normal sized risk on. Like normally I use like 5 contracts. Instead of that, I'll just use, 2, 3, maybe even 1. It's just not worth it. I always also start the week with 1 or 2 contracts. I'm not going to go crazy. I'd rather, fill it out, be part of something if it does offer it with low risk. And then, off the heels of that, I'm able to then try to find something better in one of the more dynamic days like Tuesday, Wednesday, Thursday, which are the best trading days within a weekly range. Okay. I got to get better with patience and waiting, Tony said. Yeah, Tony, what I want you to do is kind of observe, what you journaled. Hopefully you guys take it upon yourself to do what I've told you guys is the best way to journal, which is to record yourself so you can talk and you can hear your own voice and you can know what you were thinking in the moment, what red flags were there, and same with the positive outcomes. You're able to then record things during a positive moment and you get to relive those moments as well, and then see, truly how far you've come, over time. And it's just really helpful because if you journal something, the mindset of what's happening is not necessarily captured unless you're being very detailed. Most people are not very detailed. They kind of just put the entry or whether they won or lost, how much they won or lost, and they just move on about their business. That is a wasted opportunity, So yeah, if you guys have the means to do so, get a big hard drive, external hard drive, and just save everything to the hard drive. I have a 10 terabyte hard drive that houses every single live call that I do every single day that are more than 2 hours for like the last 3.5, 4 years. So it's kind of like, it's enough storage for years, even if you're recording something like on Zoom, which is the easiest way to do things for someone that doesn't do this yet or make content. And then you can kind of just, observe your performance and get back into your head so you can like truly relive those moments, both the good and the bad. And it's a very, very good asset for learning. So I encourage you guys to do that if you haven't already. Okay. Yeah, Tony said, I got it better with patience and waiting. No more over leverage. Yeah. Mind you, if you guys are here and have learned from me for a while, there is a zero excuse situation that you have to make those mistakes, like specifically over trading and over leveraging. It takes time to get used to the 1 to 2 trades. You got to pick your shots properly. So there's a little bit of leeway with that. But when it comes to over trading and over leveraging, nobody that's successful got successful because they over traded or over leveraged. Maybe they do so now because they know what they're doing and they're able to put on more risk and they accept it. But until you get to that point that you can reliably say that you know what you're doing, your process is cemented, over trading and over leveraging, right? It's talked about all the time. So there's no more excuses. And it's a character flaw. It's a discipline problem, and we got to find the root causes of what causes you to overtrade or over leverage, because there's a deeper thing rather than I just want to make money, so I'm over trading and over leveraging. It's deeper than that. maybe something in your personal life. Maybe you're trying to use the market as a feel-good asset, and it's not meant to be that. Okay. So, another thing too, if you're recording yourself and you can hear what you're saying and thinking in the moment, minute by minute, um, it's just a better asset to use to be able to reflect and make adjustments and kind of see where your thinking was wrong, and then you could devise a plan on how to kind of avoid that thinking. What were you thinking in the moment? Were you convincing yourself of something that's maybe unrealistic? Especially in this environment, like this is an environment that will shatter your account. I mean, there's things happening every 5 minutes, right? So yeah, definitely consider this, you guys. I talked about it for many, many times at this point. So yeah, just think about it, because it is a better way to journal. Okay, and you get to look back on your experiences real time, maybe 5, 10, 15 years down the line, and I'm sure that you will be very appreciative that you did so. Because instead of like a chart that has no emotion, no real captured moment aside from just what's written out, uh, recording your executions, your analysis, minute by minute while you're engaging price. I mean, there's nothing that compares to it. It's really not. So yeah. So with that being said, again, early start of the week, it's accumulation manipulation generally. We'll see if it can run up into some PD array. We'll see if there is something reasonable for that in that regard. Tuesday we have news, PMI. It's very vicious, so be very cautious of PMI. It's normally one-sided. Very high chance of early wicks, right? That'll sweep both sides, and all of a sudden it'll just be one-sided. PMI is very important. Has to do with manufacturing and whatnot. So it's very dynamic. It's definitely one of my favorite news events aside from the unemployment claims. This was just like a step above it. It's a lot faster. There is news at 6:45 and 7 a.m. So keep in mind the possibility for a two-stage delivery when price has the separation like this, whether it's 5:30 and 7 or 6:30, 6:45 to 7. A lot of times there's going to be that first move that's fake, and then the second move, right? It'll be the real move. So this is after 6:30 too, so I like that. So we'll be live at 6 o'clock on Tuesday. So I think this will be fun. It is the end of the month. We are still very early in the quarter, so there's a lot of position building going on right now and money changing hands. We do have a lot of institutions that are on the sidelines. A lot of big investors like Warren Buffett that are in cash. So, they're doing that for a reason. They positioned that way before any of this happened, because of the threat of war. And now it's kind of stretching out a little bit. So, who knows when this is going to end? So you got to manage risk. Okay. So, and then of course we got Wednesday with no news. No news equals low probability. We'll see what happens. It could, if Tuesday's quick, accelerate, right? Just to go all the way through to a PD array it wants to reach for. And then we got Thursday and Friday. If the week starts off very quick through Wednesday and it's really one-sided, and we hit a opposing PD array either on Thursday or Friday, that's when you could start to frame out the 30% of the range and then expect TGIF to happen going towards that direction. Okay, and again, you have to anchor this with a PD array that's opposed to, say, a downtrend. It's going to have to hit a bullish PD array, and then we can kind of go from there. And then gauge it out, map out the weekly candle, get 25 to 30%, sometimes 35%, and then you can have an expectation if price does turn around, and this scenario unfolds, you'll be able to then try to frame out something that makes sense potentially. Of course, those of you in my private group, if that happens, we're live every day, so you'll be aware of it before it happens, and I'll be mapping it out for you guys as well. And those of you on YouTube that are hopefully in my free Discord, I'll be sending updates there for you guys as well. Yeah, I go live with my private group every day, so that's that. So yeah, we'll see what happens. Right. Again, PMI and unemployment claims are my favorite. Unemployment claims because it's not as aggressive as most news events, and the PMI because it's one step above. It can be very violent, like NFP or CPI, depending on what they decide to do. It could be that scenario this week because there's so much stuff happening. So these are all excuses. The data doesn't necessarily tell the whole story. Like if you look at what actually happens, many times it's just like sleight of hand, and the market's already pricing in the big moves that take place before the news comes out. They already know where they're going to go. So keep that in mind too. But that doesn't mean that the news is useless. It just means that you could schedule around these times. Something's going to happen, and you just go in there and try to find your setup, manage risk, and you do that every week. Okay. So yeah, with that out of the way, let's actually now jump to our first assets. Okay, so if you guys remember, I called this trendline liquidity. If price was going to, give us that continued breakdown, we had a break here for the 10-year. After taking stops, there was SMT at the highs up here, right at the high extremes. I think it was more on a quarterly perspective that it was an SMT. Yeah, right there. Quarterly SMT right there. I did call for lower prices. We've been right basically 100% on this asset as far as what price should do and what things lead to certain reactions. If you go back and look at the videos, which I encourage you guys to do, these videos tie in with the Tuesday calls. And then obviously every single day with my private group, we refer to what it is that we come up with on Sundays. And we have a very high accuracy. This last week was no different. We called what it was going to do, gave our invalidation levels, they never got breached, and price just delivered like gangbusters for those that are paying attention. It pays to be around people that know what they're talking about, who prove it like I do, and many of my students now also do. So it's very helpful. So you're not, lost in price given all the stuff that's happening. It's very easy to get lost these days and kind of doubt yourself and doubt what it is that you're calling in price. But what we do here is proven more often than not that this is how things operate. This is the way the price wants to seek this or that liquidity. This is what happens when a certain scenario unfolds. So we got pretty high expectations, pretty accurate expectations, most of the time. We could see, what is this? 2-day chart. I think I like this weekly view. Let me see something real quick. See what time this gap occurred. I want to see what time this gap occurred at, because then it'll give us some insight, whether it's a new day opening gap or a new week opening gap. It's not a new week opening gap. Okay, so that was a new day opening gap. Very rapid new day opening gap. So we'll put that there. So that's going to be significant, right? It's from a long time ago, obviously, August of last year, but we're in that area. So it's going to use those levels. So you want to make sure you're aware. It's obviously not a, be all end all, but it's definitely something that helps build context. The hell is, where's my markup? Whatever. Okay. So yeah, this is a new day opening gap. And again, we talked about this last week, how it filled it completely in. It targeted that. That was our target. We had high, low, higher high. This is a failure swing in here, type 2 dealing range for those that have been with me for a while. Let me see. So then we had a breaker here, which I called out. Talked about this being a breaker. It's also a weekly bullish order block. And that's what basically led us to seeing price go higher. Again, the importance of this, for those that don't know, the importance of this asset class is it has a heavy influence on the foreign currencies, the indices, and the DXY. DXY in a positive correlation and a reverse correlation for the other assets. Okay. Man, I feel like I'm getting sick. Seems like I always feel like I'm getting sick, then I never do. It's no bueno. But yeah, so that's why we spend so much time on this. That's why you're encouraged to also do the same. If you choose not to, it's fantastic, but just know that you're missing some key insights that, that it could be very, very helpful. It could help you reinforce the ideas that you carry. Okay. So we got 25% there. We'll go drop down to these lower time frames. Yeah, look at the dollar. See the dollar down there. We have got this down here, this gap. I like that a lot. That has no liquidity. We'll have to see what it wants to do there. We got this low to that high. Should be able to act as a balanced price range. So ideally, we don't even see price break through this 50% level. Okay. Ideally, if it's bearish, we're going to respect this as a bearish breaker. Low, high, lower low. This was also a market maker sell model, right? Consolidation, accumulation, smart money reversal. Let me pull this up real quick. 50% was taken out, right? Then it dropped down again, came back in. The down movement here on this accumulation, you see how perfect that down movement behaved as resistance, right? So the accumulation on the left side turns to distribution on the right side. Because there was only one, this one should have been the dynamic one, targeting the equal lows. And did it? Yep. So from this time frame, it's 10-minute. That's what happened on the lower time frame for the dollar. We do see, like I said, that if this is going to be positively correlated to the DXY, then whatever this does, we should see a heavy impact in the DXY on a positive correlated basis. when there's a crack in correlation, or the bonds are sideways, or things are just not agreeing with each other the way they need to, the way that they fundamentally are supposed to, that shows you that there's a problem going on. Something is happening that we're not aware of, and the conditions are a little bit more tricky. Okay, so then you would just basically cut your risk. Okay, so you have a swing high in here. Okay, price took out that swing high, so we got low, high, lower low. That's a bearish breaker. We also have this high, low, failure swing, breakdown. Okay, and again, we got the gap down here. Could end up being targeted. These relative equal lows here, if price does look to go lower, but that's going to have to see or be coupled with the bonds, the bond yields here going lower. And we've already taken out significant liquidity up here. Yeah, there is an SMT there, actually. There's SMT in there as well at the highs here with the current and previous candle. So yeah, what we see on this, the lower time frames for the dollar, when you move up in time frame, what is it showing you now? Does that look overwhelmingly bearish, like some would maybe assume when they were on those lower time frames? Doesn't look overwhelmingly bearish to me. And we're still not done with the yields potentially going higher. I believe that honestly we have the possible ability to get us up to here. Maybe it happens after a retracement, right? It could very well be the case. But we'll see what happens as a result of that. Okay, we'll just pull this over here. So we got this wick in here. If price does look to go down a little bit, that's my line in the sand, right? I want to see it react here. It's not necessarily fully disrespected if it shoots a wick through it. We do have this down candle. It should be able to trade into that. Given the wick respect here, we got an inversion for value gap here and here. Clearly, bullish order flow is in line, right? Down close candles are being traded through, traded back into, and then respected up to the 50%. We got the wicks being respected, right? We had a drop down, full closure of this fair value gap before it got up here. Then we, closed above this wick, right? Or this candle closed above this fair value gap. And then once that wick was formed as well, the next candle traded into it. And then we closed above the 50%, plus the fair value gap, plus this fair value gap, plus the down close candle, down close candle. We also have high, low, higher high. This is a bullish breaker. So lots of things are still intact. We did just recently take this high though. So we got to be cautious going into a new week that is coming off of a sweep of significant liquidity, because that now has been external range liquidity that's been violated. And now we may look to seek internal a little bit. Maybe we get something like this, but respecting this here on a closing basis. If that continues, then we have really no reason to sit here and think, okay, well, it's going to go lower. We have no reason. Now, if we lose this low and we start to lose some of these levels, at least 3 of them, of course, things could change. And if we get that followed with, bullish bonds, for example, right? The next asset we're going to look at, that would all start to support this going lower, and that as a result would then lead to potential bearish dollar. Okay. So again, we're going to be watching this. I think I'm going to put that there. And again, we have this new day opening gap in here. Okay. Can actually do this. All right. So yeah, with that being said, you know, my initial objective obviously got met, as it usually does. Hopefully you guys made sense of how we've arrived here and in the other assets, because they have also went to exactly what we predicted for weeks before it happened. Did the same thing last year, right? We called the low of the year last year, which was the first time I ever did that. When Trump first started putting out the tariffs, I use that as a signal to watch for changes in state. It was at a yearly bullish order block as well, so that was very interesting. If you look at the yearly chart here, just a quick glance. Price is doing. Well, price is pretty much sideways. Had a hard time the last couple of years, but we still got bullish order blocks being respected. Weekly and quarterly here, converging with one another. Right? How much of a separation? It's not really much of a separation, huh? Could just use the quarterly. Okay, so again, we have failure swing up here, failure up here as well. It is trading into a wick, right, on the 10-year. We do got relatively equal highs up here that could end up becoming a target if we do have a bullish continued, quarter, right, or next couple quarters. One thing you want to keep tabs on too with a quarterly perspective, this is true across all assets. Everything I'm doing here, it's the same stuff we do on other assets. But again, the most recent high and the most recent lows of the current and most recent candles, wherever price is currently at, the highs that are in close proximity to that, like, these highs up here, and, these lows here, these equal lows, and this one, because they're so close, those are the significant pools of liquidity, aside from, say, the extreme up here and the extreme down here, or anything down here, or, anything up here. You just have to figure out, where's that weekly candle going to go, and what's more likely? Is it more likely to target this up here, or is it more likely to target this down here? And all the stuff that we talk about, all the contextual context building situation that I put you guys through every Sunday, and for those in my private group every day, it is attempting to get you to understand that and how you can determine, which one is more likely, relative to the strategy. And, again, those of you that have been with me for a while, I mean, you guys see the result, it really speaks for itself. So it's definitely worth considering, it's definitely worth it. So, but yeah, so that being said, those are my opinions on this asset. We'll see if we could stay above, this here, which is a daily. Okay, so it's a daily wick and order block. So we'll see how that wants to be treated. Again, because it's the start of the week, we got our larger targets. But the high right here, that's Friday's high. So that's significant. And Friday's low, that's significant too. That's the most significant liquidity pools on the chart at the moment. We've already engaged one. So I think that we do have a chance to want to come back down into this area. How it treats this area, if it breaks through it, that's a problem, right? If the wick levels in here do not hold in price inside this bullish order block on the higher time frame, then we'll have to make adjustments. But until that happens, I'm going to keep the opinion of price, continuing to go higher. And again, if this does go higher, then this whole delivery down into this level will just simply have been a retracement to then try to go higher. You can be extra conservative if you wanted to with the DXY. And you can be like, okay, well, it looks like it wants to go lower. Or looks like it wants to go higher, but, we're in a retracement. So what I'm going to want to do, crap, this up. What you could decide to do if there's a situation where you're not sure, you want to wait for the change in state of delivery, right? So if we got a retracement like this, especially if you're doing this on the higher time frame, if we can get price to seek this high here, break above it, and then attempt to shoot a wick that eventually respects the midpoint of that down candle in there, right? That is a beautiful signature. It's one of the plays that I operate with in my playbook. When there's a retracement like this, I have the daily fair value gap fill play, which is me just simply targeting after a displacement the fair value gap being targeted, because I know external to internal and then internal to external, right? That's just the way the price operates. Otherwise, it's in consolidation. So if you're able to wait for things like on the daily chart to say maybe break above a high like this, shoot a wick down into it, and then it proves that it respects it by getting back above it again on a closing basis, that candle can be used to trade with the trend. And it's a trigger point, basically engaging the fact that, we're now ready to keep going. Rather than trying to guess and pick a bottom, this is how you can, for the most part, have clarity as far as whether the timing is correct or not. The day of the week is important. The time of the month is important as well, because the middle 2 months are the expansion phases of a monthly candle. The middle 2 weeks in a month is the expansion phase. Just like how the, Tuesday, Wednesday, sometimes Thursday, middle of the week days is part of the best trading, right? Because it's the middle, more beefy part of the weekly range. Same thing with the daily range, right? You have New York session that's in the middle, so it's continuation. Sometimes London obviously begins pretty quick, but if we have Asia, London, New York, Asia, London, New York, and then the middle, right, with New York, it's the same principle. I'm just running a blank right now. But it's the same principle across the different time frames, because power 3 is on every chart. Every single candle is operating with power 3. Even a 5-minute candle, if you go down to like the 1 second chart, you could see the power 3 dynamics taking place every 5 minutes, just on that smaller scale that's working inside of the larger one, right? So you could break it down in a pretty insane way, and it's very fascinating. So just keep that in mind when you're thinking about these higher time frames, when you're observing these candles, the dynamics of power 3, and the whole fact of internal to external, external to internal, right? This is external. Anything inside, like order blocks, fair value gaps, so on and so forth. Breakers too, right? Once it delivers the breaker, that goes from external back to internal. If you keep that in mind and you just start to build that anticipation, well, when highs are taken, what generally happens if it's a higher time frame high? It a lot of times seeks internal in some capacity to hit some PD array at a discount, order block for value gap, sometimes a wick, and then it begins its move again. And you could gauge that, like I mentioned just now, with the change in state of delivery. This explanation that I've just laid out is applicable right away. And you could see the validity of it right away, either in backtesting or real-time price observations. Okay, it's just one of those things. And most people aren't even going to look to go study it. It's just the way it is. Human nature is, at least in this generation, very lazy. So, there's a reason that people struggle. We all struggle at first, but most of the time the prolonged struggle has to do with personal decisions, whether they do or do not do something related to backtesting and study. So I encourage you guys to study this, right? Not only moving forward, but also in your own studies. Maybe even make a section for it, because it's that important. How to get in line or know we're in line with an overall trend. Internal to external, external to internal delivery. And what happens after we take out significant highs from that liquidity mapping list, right? Previous month high, week high, daily highs and lows, right? That type of stuff. So, yeah. So that about does it for the yield. So I want to see if we can open up, maybe go lower a little bit, respect this level. If it doesn't respect that, that's a red flag. Okay. So until that happens, I'm still going to look to see if we can get price to come up into this level up here. Okay. So we'll see if we can get that. All right. So with that being said, let's move on to the bonds. Okay. So it's pretty interesting how just how quote unquote correlated, this looks to the indices, right? Man, that looks like it's almost like they work together. Wow, look at that. See? It's very interesting, right? Because what I talk about with these assets and what ICT teaches about them is true. Okay? Because again, you want to be able to verify a narrative and a move that's going to take place. You need supporting assets to help you do that. You could obviously look at one asset and use the concepts, but you're missing a layer of trust, a layer of confirmation that you can easily get just by, doing the work of looking at the other asset. You don't have to trade everything, but, there's a market truism. Well, there's a lot of market truisms like intermarket relationships that you need to be aware of. So it's fascinating to see this. If anyone ever doubted it, like, oh, I don't know if this correlates, or they're new and they just never seen it, this right here is a great example of just how correlated everything is, right? Or, how reverse correlated something is. Like this is reverse to the dollar. So if this is going lower and the yields are going higher, we should see the dollar going higher and the other assets going lower, which that's what we're seeing right now, right? So again, if you just take everything that I talked about for the other asset, the yields, and apply it here, but just the opposite way, you'll basically have this analysis. One thing that does stand out to me is these equal lows here. I very much like that. This monthly bearish order block that I called out, the low of this inversion fair value gap, you can't get any better than that. That's beautiful. Absolutely beautiful. We have this large wick, so it may hesitate, especially because we have this inversion fair value gap on the monthly chart. It may hesitate to try to get up to here or dig too deeply into this order block. It's already treated it as a balanced price range. It's treated this low, high, lower low as a BPR. It's also a bearish breaker. Take this down candle here. So we have lots of levels in this area, from the order block to the breaker to the inversion monthly fair value gap. It's over here. Well, it's more of a reclaimed fair value gap now. Yeah. We've got that reclaimed fair value gap. So yeah, if you just take everything that we talked about, add it to this chart, then you'll basically have, in the opposite view, what I believe price is going to do. And this large wick, like I mentioned, that wick should make it hesitate to get too deeply back into this. Plus, we have multiple PD arrays. So with this being the case, the order block, the breaker, the wick here, the reclaimed bearish fair value gap, the breakdown, the bullish yields, you can imagine that, this should be a pretty dynamic delivery, and it shouldn't break these levels up here. If it breaks these, we have multiple PD arrays being violated, and then you just have to simply adjust. So I think, again, that, this is what's going to happen. We've been correct all the way up to this point, basically all year, with what it was trying to do. So I don't think that's going to change. Okay? Maybe here and there we'll get it wrong, but, we'll understand what it did that disrespected it, and then we'll get back in line, because we have a flexibility process that, in itself is spectacular. So Again, if you guys have any questions, just let me know. But this just about does it for the bonds and yields. Okay. So do you guys have any questions? Let me know in the chat before I move on. But hopefully this makes sense, because this is a key foundation to what we're going to do for the remainder of the live call. Okay, so just let me know in the chat. Throw a 1 in the chat if everything makes sense. And again, those of you that have been with me for a while, this should just be review. So we've been talking about this. Okay, George, okay. Okay, good. So now we move on to the dollar. Okay, so if we take the dollar, so we've got a breaker here. We got a wick. Got another wick that overlaps. As long as price can stay above the 50% of this wick here, if we could stay above the 50% of that wick, if we could stay above this breaker here, high, low, higher, high, stop, run. I mean, we talked about this whole entire move. You know, when we were in here, we were talking about how we're going to watch this order block here. If it gives a trade down into that and respects it, the next delivery should continue. I mentioned this earlier, right? When you have a stop, run, order block, and then the respect to that order block, that's a significant piece of price delivery, because that confirms that this order block's holding, and there's now officially a change in state of delivery, confirmed by the respect of this 50% level. And I mean, you could see how dynamic that was, right? We had a very similar thing here too, just to the downside. Respect to that order block, the next couple candles delivered. This one got above it, but it closed above the 50% there. So what happened? It continued, at least for another day or another week. And then it gave it up here. And then what happened? It targeted equal lows. And we had a quarterly low to also look at. And then now we got this process happening again. So we also have this wick here that was respected. You know, that led my belief in price going higher through the roof. And then, of course, you add that with the yields being what they are to the dollar, and with them going higher and the bonds going lower, it's just absolutely amazing. It's super comfort building and clarity inducing. That's why I talk about it all the time with the bonds and yields. But yeah, so as long as we stay above this, you know, we may look to try to dig a little bit deeper. The dollar's in a range. There's a lot of craziness happening in the world, so that's a bullish thing for the dollar, because it's a quote unquote flight to quality, right? And until that changes, you know, whenever there's chaos, you know, people look to try to be in dollars, especially if interest rates rise. That'll bring capital to the dollar, because money goes where they get the most return on investment. And billionaires, they like passive income. So if they can make money off of, say, bonds, that interest rates are, you know, above 5-6%, many times that's what happens when they, have that type of scenario with the interest rates. Other countries too, it's the same thing. Capital likes to flow where they get a high interest rate, right? So they can gain interest on their money that's invested. That's a set return generally. Obviously, it's kind of volatile because economic policy can change, but yeah. So everything is basically at the moment flight to quality with the dollar. So that's another reason why it's overall bearish. We're in a seasonal influence that's pretty bearish, right? Every single year it's like this for the indices. It's like some off years that don't really have that behavior, but for the most part, again, you got to think of the yearly power of three. If it is going to be a bullish year, isn't it only right that they're going to take down the first quarter, maybe a little bit into the second quarter like we see right now, and then set the low in those middle quarters, and then start rapidly moving higher for the second and third, sometimes the end of the second quarter as well, to then create that whole yearly power of three range, because there's 4 quarters. So first quarter, like I've said before, is accumulation manipulation. Sometimes it bleeds a little bit into the second quarter with the manipulation, but then eventually there's a seasonal low that forms around April. If you go back and look at some of the seasonal charts that I give you guys access to, and you see it start to turn. And then if you take that and you go back to like 10 years of data, it's shocking how this is right in front of people, but they just, ignore it because they're lazy, or they look at seasonality one time, it doesn't work because it's not time yet, or something's happening in the world that's refusing to let it happen, right? Or let it fall in line. And then they just give it up. It's a macro tool. So, a lot of people wonder how I'm able to call the market quarter to quarter with a high level of accuracy. Well, this is partly responsible for it. Some of these things, this analysis too, that I do with the bonds and yields and how we are so thorough, this is also a heavy influence too, as far as how we're able to be in line with the market. Okay. So it's a truism, right? It's a market truism. It's just the way it is. It's context building, narrative structuring. That's basically what these calls are on Sundays, helping you have that process, which most people do not have a process like this. If you follow anyone on social media, most people are not going into depth the way that I do here, even on YouTube. Aside from ICT himself, everyone's just trying to say, oh, well, I think it's going to go here. Barely give you a reason. Don't really give you invalidation levels that are highly accurate too when they get broken. It changes things, and it's proven by obviously what I've been showing publicly and privately. But, again, it's just another reason why this community is different. But again, we have this breaker, like I said, this down movement. If we move up in time frame, maybe we have a bullish order block. We do right here. Okay. We're basically above that. So we'll see what happens. We got a monthly fair value gap in there. I marked this off before. I kind of removed it. It's a little bit far away. If it comes back down into that, I wouldn't really like that, because it's now going to get below levels that are more recent, more current. No, I guess it's not too far off. Yeah, that's just another reason why if this low is taken with displacement and it breaks this, and maybe we see that the yields are going to decline. If the yields drop and we get below these levels, we may not be continuously bullish until it kicks back in line again. But as long as we stay above this, right, we're above all of this price delivery, that's a balanced price range. We're above this high to that low, right, breaking that high. The midpoint of that, right, that whole down movement and up movement should be treated as a BPR if we're going to be in a very dynamic bullish price run, targeting these equal highs up here. That's my main objective. Again, we know that we're in line with the timing of this move continuation once we get another change in state of delivery. Here from this daily chart for that daily perspective. And then obviously, we could find early signs here, say on like the 8-hour. As long as it stays above this low, I don't want to see that taken at all. Maybe it wicks down below it, but preferably that does not happen, because we got this wick here. I want to see us stay preferably up beyond the 75% to 50% range, because this is just simply a retracement if it does do that. And we should continue to see price rapidly increase and go to the buy side. And again, if we lose this, because this is a monthly fair value gap, that'll be a problem. Another thing too, we got this fair value gap down here. That's really deep, But again, that's already breaking this. These are early signs that things may shift, right? And we may consolidate or turn around entirely. Okay. We got change in state here, change in state. This is basically a propulsion block, right? So the midpoint of this, because it's an order block that has an order block inside of it, basically. So we would not want to see this get violated up to the 50% if it's bearish. I'm expecting that to be violated. So that would just be another deeper context in terms of the PD array relationships that supports this going higher before it gives us that change in state of delivery on that daily chart, okay? So something I do see, if it does give it up, say it respects this, continues to leave these available up here, say it shows no respect to this, we got these equal lows here. And then again, we got that fair value gap down there as well. So I'm assuming that, we're going to hold in here, continue to go higher with the bullish yields. We may give a slight retracement because it's the start of the week. They want to manipulate below the open price. But yeah, if this structurally stays intact, we'll continue to seek higher prices off the heels of this. Okay. And again, unless something changes, nothing changes. So that's basically my opinion for the DXY. So yeah. Do you guys have any questions about the DXY? Let me know in the chat. I just throw one in the chat. Then we'll move on to the currencies. All right, appreciate you, Tony. All right, so. All right, thank you, George. So the next segment slash section is now going to be the foreign currencies. So we've had already throughout this call a lot of stuff that's already been determined at this point that is behind us that we can use, right, for confirmation. I can say that if the dollar continues to rally the way that we're assuming it will, that's going to apply downside interest for this asset and the indices. So we are inside this daily fair value gap here. Okay, so that's that. We did kind of get above it. It is definitely a mess, right? It's definitely a nasty mess. Unless we take out this high up here, I think that we will continue to drop. This high or the other one. Okay, so move that. Okay, let me change the color. I want to make it super obvious, you guys. I think bright yellow is obvious enough, right? I think I'll just put one. So yeah, if we can't stay below this high up here, that's going to be a problem. We have all these gaps in here. We could see they're acting very dynamic. It's very nasty because of all the stuff happening, but clearly there's moves operating, and we've been able to call this entire move lower. We called it here. We called it here. If you go back and look at the replay of the Sunday calls around these moments, this price action has been walked like a dog, okay? We've walked many things fairly easily. And there's been some little times here and there that, we started off early. I'm not perfect, right? So we started off early and then it didn't do quite what we thought it was going to do. But then immediately, those of you in my private group, you guys can attest to this. We almost immediately can determine what it's going to do, even when we get it incorrect at first. when we need more information and whatnot, by 7 a.m. generally, right, that beyond that first 30 minutes, if we start off without a strong narrative or idea of what it's going to do, within that first 30 minutes we figure it out generally, and then comes the 650 macro and then the 750 macro, and generally by that time we've already done things. So yeah, it's been pretty spectacular, honestly. So I don't think that this is going to change. We'll see. I do want to see how this is going to be treated here on the euro. There is this order block here. Let me see. Bullish daily order block. I think I'll keep that there. This is all really, really disgusting. So yeah, we're going to have to observe what this is going to do here. Oops. Okay. Because we got a bearish breaker here. So it's just simply trading up into that. You think about it from a more large time frame perspective. If this right here was the 5-minute chart, we wouldn't be overwhelmingly bullish unless we start to invert levels like this. It's basically a change in state here for the weekly, but it may be just a short-term change in state. We didn't even break this high up here. So let me see. Yeah, there's not even any SMT in that area either. Oh, I guess there kind of is right there with that candle. Bearish. Oh, we do got SMT here as well. Let me see something real quick. Yeah, it doesn't show it. Yeah, so we'll just keep tabs on the larger one like that. Yeah, we'll see what happens. Again, we took stops up here. Prices rejected aggressively, and we're selling off. So again, unless that changes, right, and our validation levels I just laid out up here gets violated, I'm going to continue to try to seek this going lower. Let me go double check what this was. Yeah, this here is that wick. Honestly, we can actually start to use the more recent one here to there. So we got the wick 50% level. So again, unless it takes out these levels up here, right, this invalidation is all the way up there, as you could see. So it's going to have to break through. It's going to have to hold this. Remember, we labeled this as a propulsion block, order block. That was within an order block, right? So we got to see what's going to happen in that. It's very similar to what's happening on the DXY, just the reverse. So again, depending on what dollar does, depending on what the bonds and yields do, that's going to determine really what's going to unfold here. It is nasty in a range, so more information is needed. But again, it's been bearish. We did take out liquidity. It has given a retracement. It has respected these upper levels, but now we're kind of stuck inside this one these levels as well. So we'll see what happens going into the open of the month, or of the week this week, and how we're going to close the current month. Speaking of the current month, right, the March open price was here. Let me see. So got that monthly open there. So we got dropped lower, rallied up, spent some time above, but it's been bearish. So the month of March, it's been a nasty, nasty month. It is the month that presents us with the quarterly rollover, which we talked about the other day. And again, the week before, and the week after can generally be a little more chaotic than we would like. So you can see that the euro was a lot more dynamic and easier to go lower than the British pound, but nonetheless, they both pretty much did exactly the same thing, narrative-wise. So yeah, so I guess we'll classify this as I'm favoring more downside, but we got to watch what the dollar's going to do. See if the dollar's going to go higher, which I believe it will, and whatever decides to happen within that, and how we look to treat these levels going into this next week, going into the next month, that's going to determine what I believe is going to happen for maybe the next couple weeks. Okay. And then, of course, we got the extreme lows down here. We may see this turn into a market maker sell model. Okay, we got smart money reversal up here, accumulation here, the last down movement. All right, we definitely don't want to see it break this down movement's upper portion here, like I'd say up to this level. Ironically, that's the last time they shorted before it rallied up and then gave us the sell-off. If this is a sell model and this is the accumulation, that last down movement in there, when price violates it, should act as dynamic resistance and a balanced price range, an inverted balanced price range, because this went lower to go higher. So, if it was going to keep that structure going, it should have retraced into it, respected the midpoint, and then continued its run higher, going from internal to external, external to internal, all the way up to whatever the target would be. This here obviously has broke down, got below this, maybe a market maker sell model. It was a market maker sell model with this rally and decline, which we talked about. We had equal lows here, swept those. So yeah, again, we're inside of a level that should favor shorts still because nothing structurally has changed, but it's kind of hesitant within this area. So with that information and price being in a consolidation at the end of a month, it's best to wait for more information. If I was to trade this, that's the perspective I would be thinking. I used to trade currencies. GBP is what got me my first funded account with FTMO until they kicked me out because regulations and whatnot. You guys know the story about that. But yeah, so this is my perspective basically on the foreign currencies. Do you guys have any questions? Let me know in the chat. You guys can ask any questions, right? Anything at all. I'm more than happy to help. I'll be right back. I'm gonna go to the bathroom real quick. And I'm back. I was just looking at my phone. I was in the bathroom, and one of my friends just bought his first property. Amazing. One of the people that I started trading with, like early on. It's amazing to see what this industry can do. It's amazing. It's absolutely amazing. Yeah, it's amazing. What a feat. These are things that I get told constantly from many students. Not everyone obviously gets to that level so quick, but eventually if you don't give up, you have no choice but to learn. It doesn't take that long. Once you know what you're doing, it doesn't take that long to be more successful than you can ever imagine. Obviously, there's no guarantees, and it's up to you. You got to do the right things. And if you don't do the right things, it could be, it could be pretty detrimental. Right? But man, he bought his first property with that. I mean, he showed me the entry. And it was the Razor model that I talk about. It's amazing. People don't realize what is taught here. I'm not someone that does all these crazy marketing gimmicks. I don't have to. These types of testimonials, he bought his first property because of this. I mean, that's amazing. Amazing. I love seeing that stuff. Because again, I was hesitant to teach. And I was like, do I really want to deal with all the problems and stress that comes from me wanting to get someone to do certain things and they just refuse to listen? I was like, is it really worth it, bro? These types of things makes me not regret teaching at all. Makes you want to do it more, right? I hope that one day, all of you guys can hit your goals. I'm here to help. But, your resources and tools are only as useful as the person using them. You could have the greatest stuff. People could be doing things left and right, showing you that it works. I could be calling the market like I do every single freaking week, every day in my private group. But if you don't use the stuff the way it's being taught, you're doing yourself a disservice. So I'd be curious to hear what some of your guys' goals are. Maybe you guys can get back to me. Let me know in DMs and whatnot. I always like to hear about that stuff. Many times I can help you kind of make a plan to try to get there and what you should be able to do. Obviously, this ain't financial advice. Nothing I say is financial advice. But I know what I know, and building wealth is not rocket science. Getting to certain goals are not rocket science or overly complex. As long as if you have a big goal, you want to break it down. Split it up into pieces. If you got a dream to do this or do that, find the number and then try to figure out how you can break it down per month, per trading week, And over time, if you take that huge amount, they say, how do you eat an elephant, right? Piece by piece. You can't just eat it all at once. It's a big animal. So you got to do it piece by piece. Becoming a full-time trader is a huge task. The hardest way to make easy money. So because of the huge mountain it feels like we got to climb up, how are you going to get there? Are you going to expect that you're going to do it all at once or within a week or a month or a year? No, it's too much unrealistic pressure. So you got to make good decisions, learn the right ways to do things, and eat it piece by piece, step by step. And what we do here on Sundays is a huge step, right? Especially because I answer questions and all that, and prove that this stuff works. Every asset that we've talked about today so far, from the bonds, yields, DXY, up to the currencies, we've called these markets week to week. It's been spectacular. Rarely getting it completely wrong. And then even when we get it wrong, we finish the day correct because we know what price is telling us. We're fluent in the language that's being spoke, right? The market language. So yeah, with that being said, moving on to the next segment, it's going to be the indices. So we'll start with all three. Okay, so if you guys remember, I did talk about this extension, 2 to 2.5. I can't remember if I talked about it with you guys here on YouTube. I think I talked about it on Sunday. I definitely talked about it every day with my private group, pointed to it, and went right to it. I talked about this response in here, how this low, high, lower low should act as a breaker. I talked about how this in here should be a balanced price range. I talked about this low to that high, breaking down below that should be a market maker sell model framework. Last week, you can see it was clearly a bearish power 3, right? We got the open, spent time above, simply reached up into a higher time frame PD array. That being this here, order block. If we go to the 8-hour, we could see how this wick in here beautifully closed on this candle below the midpoint of that wick, inside of this fair value gap in here. Right, well, kind of got to add some of this too, right? We got that gap, but it respected it. Okay, if we move up a little further, see what else we could find. Got this order block here. We talked about the quarterly fair value gap the price is reaching down into. All right, that being here. We mapped it from up here down to the quarterly fair value gap. Again, if you guys have been with me for a while, you know that we have walked this like a dog. This wick up here, it was the yearly wick. I talked about the levels in that wick as it was trading to it and reacting away from it. It was further context that we built, right? From the very start, from January, we talked about this wick upper portion, how that's going to be respected. Price closed or basically dug aggressively below the 50% of that wick. What happens when we see this on a lower time frame? Generally, that is showing respect to that upper movement, right? Or those upper levels. So it also created a fractal high. When a fractal high forms, many times it can go in that direction for a while until it hits some type of significant higher time frame PD array. Which higher time frame PD array in this instance? It's the quarterly fair value gap. So we're inside the quarterly fair value gap here. So again, moving forward, we're going to have to continue to see how this is going to respect that. Okay, there's liquidity pulls down here as well. Or if we go to the continuous contract, I'll let you guys go to the continuous contract. If you don't know where to find it, it's right here. Okay. If you go to the quarterly perspective on that as well, it's got a discrepancy. So this, we've talked about this before. That's why sometimes the continuous contract, you don't just refer to the quarterly contract if you're trading the indices. You can, but you'll miss key insights, like the fact that the gap was hit, right? This low here was hit. Okay, right there. So, it's good to use a quarterly or a continuous contract when, the current quarter's data were outside of that, like this. So you don't have to just deal with this. There's not really much you could do with that. But in that instance, all you do is move to the quarterly perspective. And then you could start to see even greater things like this. So 950, 23,000 actually. I think that's reasonable. I think I'll just map that out for future reference. Okay. Something you can do to also further verify confluence. Take it from that high to that low. We can get our standard deviation projections. And what do you know? From this daily chart, if we take the projection from this high to that low, we could see that it fits pretty perfectly to the tick with the 2.5 standard deviation. That is a very strong projection given the sentiment and what's happening. If everything stays the same and this continues, that is powerful. If this was the 5-minute chart, this is exactly what I would do on the 5-minute chart, and I would be aiming for something like that. So I think that we will be able to get down there. Okay. So let's go back to this here. Just throw that on this chart as well. Okay. We did the same thing here on a smaller scale for this small price leg, but in the grand scheme of things, we have this as well. So we got to keep tabs on that, well into the future. And then if it gets real excited, it can come all the way down to there too. But I'm not sure if that'll happen. It could, depending on how this war goes. If it doesn't end quick, like within the next month, this is going to start getting out of hand. And we may start to see some really, really painful things all over the world because people don't realize everything is ran off of oil and gas. Almost everything, majority of every product has some type of petro relationship, right? Or use. So, it's in makeup, it's in plastic, it's in, so many things. Gas, right? Oil. That's just what it is, right? Gas and oil, if it's super expensive, energy is highly expensive. That's bad for transport of goods because what do they have to use to get things from point A to point B? They got to use oil and gas. So if that cost is increasing, who eats the cost? The consumer. The companies that have to push their products and whatnot. Obviously, they take a short-term hit, but then again they balance it out by increasing prices on the consumer. If that happens, that's a problem. If things get worse and things start to spiral out of control, and a solution can't be solved, we may be in for a bumpy ride. The whole world, especially those that are more or less fortunate, because there's going to be even less access to things because things are just so expensive because of energy. So hope and pray that it's not going to happen. Hopefully everything get solved quick. It's the longer this goes on too, the worse and worse it is for Trump. So we don't. Last thing we need is the same shit that we had under Joe Biden. I mean, dude, it's so bad what happened. Just the data itself, aside from political beliefs, the data itself showed the damage, let alone the safety of the country. So it was not good. It was like controlled destruction while smiling in your face. So yeah, we got the higher time frame continuing to drop. It's done everything that we've talked about, like I said, to the tick. Okay. Called these lows down here. Called this short in here. We were a participant in that sell-off, real time with my private group. I shared it in my free Discord. I gave you guys the narrative, right? I said, when we were up here, it was kind of tricky, right? We wanted to see, is this going to hold? Depending on whether this holds or not, if it trades down into that, it's going to have to respect that as the accumulation on the left side, distribution on the right side, or the way that ICT says it, this is all distribution and accumulation of buys was unfolding until it didn't, and then once it broke this low to that high as 50%, that's when we then decided, okay, well, we are for surely certain, especially if dollar's going to keep going higher and the bonds are going to keep going lower, we'll continue to see this drop. And then we painted the sell model, talked about how this in itself was a sell model, which we participated in as well, inside this price leg here, going through that low, targeting this. If you guys remember, I had a markup that looked just like this. You can go back and look at all the stuff that I shared too. You'll see that it was there. And then we walked it all the way down. So I think that unless something drastically changes with, say, like us getting up above here, hopefully, if it does get up there, that'll potentially mean that things are changing in the Middle East more positively. I do believe that, this low to that high, we broke down. So this whole area of price should be a balanced price range, and a healthy delivery would be showing us that, okay, it's going to trade into this, but it's going to respect it. It's going to leave these highs open. We shouldn't come back into that range. If it does, we may be still in for a ride with this consolidation. So that is a risk. For now, though, it looks like it's opening up. We've gotten outside of the low. So we should be able to also respect this as a balanced price range, low, high, lower, low. We got a large wick. So I prefer to really not even see price get up to this level here. I'll give it some leeway to be able to give us that manipulation for the weekly perspective. I would just really not want to see it break the highs up here. If it does break those highs, it kind of depends on how it breaks them. If it displaces and we get something like this happening, that, it's obviously not too encouraging that it's going to go lower, at least in that moment. It may take a little bit of time and do another thing like this. So, we'll see what happens. Aside from this wick here with the displacement that creates this as a BPR, that's why this should be upheld. We also have this wick in here as well. If we move up in time frame, just continue to go see higher time frame anchors. So we got 75% there. Again, we have a large wick with displacement. That creates a balanced price range, or it should, ideally. So this whole area in here should be a balanced price range, aside from the upper one up here too, which I can actually remove that now. So yeah, we should be able to see this hold. We don't want to see it break this new week opening gap. We don't want to see it break this order block here. We got this up movement. If we move up in time frame, I believe that's also in itself. Oh, not necessarily an order block. We have this wick in here too. this one that's lower. So I'll actually use that one. It's the weekly chart. So the weekly wicks, I think that we'll be able to hold this. So we'll see what happens with that. But that's going to be something I'm going to be observing. And of course, I'm going to throw that up. So yeah, just to keep things clean. Just put it right there, move it to the left. Okay. So yeah, again, ideally it doesn't want to get back beyond that. Again, that puts us right in position with this, basically in the same area that I said from the lower time frames in here relative to the weekly. It's the same areas. We just dug out even deeper context as far as why this should be very sensitive. We have sell side, buy side, sell side again. So if this is going to continue to break out, again, there's no real reason for it to come all the way back to the middle of the range in there. Now we got this high to that low. We got stops taken here and here. So this high to that low is now the new dealing range relative to this time frame and this time frame, high to the low. So equilibrium is somewhere up here. You know, again, I don't necessarily want it to go up there because there's so much in here. You know, if we're going to go lower, we could retrace a little, but you know, we don't want deep retracement. It may do so, right? It may do it because it's high resistance. But, you know, I want to see if we can end up opening up a little bit, especially with all the negative news going on in the world about the US and just everywhere because of the oil and gas situation. That's not a positive thing. And the market's pricing that in. It's been pricing it in. That's why it's being held and it won't move, you know, in any sustained capacity. There's still moves, obviously. We're still calling moves. You know, we still are able to pick our shots properly and get a positive result. But again, there's been times when we haven't taken trades for 3 straight days. And then Thursday or Friday, I ended up engaging, you know, with my private group. You know, the type of scenario has been happening a couple of times lately. And it's just because we know what we're looking for. Not every single price leg is worthy of taking a trade. You know, it's just the way it is. New traders have a hard time with this. But I mean, over time, you gain the wisdom to understand that you don't have to trade every day to make a crazy income. And if it's not showing you the things that you know are high probability, stay the hell out of the market. Don't pull the trigger. Because if you do and you take a loss and you think about it and you thought, oh, well, I shouldn't have taken a trade anyway, like that's needless. We're losing money needlessly or losing in our demo account needlessly as we're practicing. It builds bad habits. You know, you want to be in line with the best of the best possible opportunities. And that's what these calls allow you to do. Calls like this, you know, it gives you the structured framework, you know, the under the hood, if you will, about why we make certain decisions. And then, of course, the live calls that I do, you get to see it real time and everything goes together. You know, you see the picture come to life. So, you know, just know that this is the time for you to practice that type of discipline. And if you don't know, you know, the conditions that you have to be aware of that you should not take a trade in, especially if you're new, then you can ask questions, right? If you're in a consolidation, if price is chopping back and forth, if we have really massive deep retracements, if there's no news, if we're on a week that has a bunch of news, you know, all those moments in price, a week before, week of, week after a quarterly rollover, day before, day of, day after a holiday, the Mondays, Sunday and Mondays trading, sometimes Friday too can be a little bit more chaotic. So you should lower your risk or just not even trade it. You know, you can trade all these events. You could trade through all of this if you would like. Just know that if you can identify it with one of the things that I mentioned or multiple at the same time, you have to lower your risk or don't take a trade at all. Let it open up. Let it be clear and align with scenarios that we talk about. And it saves you. Many people have to deal with a lot of pain in order to make this adjustment, but again, it's not necessary to learn these lessons. I try to tell you guys, everybody, that knows what they're talking about, all the actually good traders on YouTube, from ICTs, from some of the other charter groups, or students that have groups and whatnot, like this one here. There's a commonality. They're not taking trades on every single thing they see. There's a system, a process, order of operations that they're waiting for to then present themselves with a good opportunity that's worthy to risk money, or to risk in your demo account if that's the level you're at right now, or funded accounts, right? It's just the way it is, right? It's not something that sells courses. It's not something that's like, oh yeah, whoop-de-doo, like I'm super excited over it. But it's something that, really can make or break you. And if you trade all the time, every single day, no matter what the condition is, and you're still just learning, just know that you need to be ready to take losses, and you can't let it affect you. And you got to lower your risk. If you trade every single day and you take an execution every day, you should already just automatically have lower risk, because you're opening yourself up for more risk in general by the velocity of how much you're trading. Now, it's different if you know what you're doing 100% and you've proven consistency for at least 6 months to a year, and beyond, right? You can obviously bend the rules and do what you'd like. But early on, you have to build those foundations and protect yourself as you're looking to gain your footing. So, just some things to consider, okay? I highly encourage you guys to take that advice, but, we're human. We'll do what we'll do. But just keep in mind some of these things, because it'll probably help you later on. Okay? So, yeah, again, that's pretty much my opinion for the indices here. We did, I believe, did we have SMT? Yeah, we had a small SMT with the Dow here. It was very small. Do we have SMT with the highs up there? Is that SMT there? No. So it's really not much of an SMT type of characteristic to look at. Really not so much at all. Everything's just continuing to drop. So if that changes and something pops up, obviously I'll let y'all know. You see this wick with that displacement, right? Like I talked about, how I don't want to see price come up beyond this level. You can see the same scenario happening on a smaller fractal in price, right? This larger one with the large wick in there with displacement, it's the same thing with this. Large wick, displacement lower, price comes back, respects a 50%. This is on the 2-hour chart. This level here is on the daily chart, like 16-hour, right? Something much larger than the 2-hour. So this phenomenon here is what I want to see on that larger scale, that larger perspective. Same characteristic, same way of delivery, right? That's what I want to see, just on a larger scale. And if we can get that, it should be fairly easy to take trades with that. As long as you're trading within that narrative and you kind of know what you're looking for, right? Hopefully most of you guys, if not all of you, are starting to really know what you're looking for, and if not, if you feel like there's still holes, just let me know, and I'll be able to help you. But yeah, and if we just come in here and look at NASDAQ specifically, again, if we take this high up here down to that low, get one more projection. Got another one down here too for this 4-hour chart. Price is wicking through that low. What happens when we take out a low that's significant like this? 4 hours significant. It's not only a 4-hour, it's also a previous week's low. What have we been talking about? When it takes those lows or highs, you want to go in there and study it and see what the reaction is generally more often than not. That's external range liquidity being delivered, right? That is the overall operation that's happening here. Purging of sell side liquidity, significant sell side. It purged it aggressively. Market maker sell model, balanced price range, all the things that led us up to that point. So that's external range swept. So the next thing to look at is the likelihood of internal range being targeted before it looks to continue. Preferably, the system of operation you can use is if it takes out the liquidity like this or takes out a high, you can wait till it gives you that retracement, because I mean that's tradable too, to the retracement. That's a counter trend move. That's an opposing PD array, right? And that's external to internal and then internal to external. But once it does this, you can now think, okay, well, I want to expect some type of retracement to a logical PD array that you can clearly see. And then once it gets inside of that, you want to be prepared for a potential opportunity to unfold. You could simply wait even further and wait for another change in state, right? If it creates a bullish movement, right, like this, and then it breaks down below it like it did here, you could take a trade on the next candle. We did this with this asset on this candle here. That's where my initial execution was on this past Friday. I was on live with my private group talking about watch this 4-hour order block. It broke down through it. It was a change in state of delivery. And then the next candle that traded into that, you could see the expansion because we changed the state of delivery. And then we had a logical target to reach for. So same thing here, right? It took the stops. What's the next mode of operation? Retracement into some PD array internally. When can you get in? Well, you could frame it from the PD array that's going to respond up above us, like the initial idea. The more conservative idea, the more certainty building idea is to let the change in state happen and then find your model inside that on the 1 minute or 5 minute, whatever you're comfortable with. Because now it's confirmed the change in state. It confirmed that we were targeting the low down there. It respected the highs up here, and this low to that high is a balanced price range. And this is a completed market maker sell model from this low to that high, breaking down below it. So when it returned into it, it's not expected to go deeply into that. It should leave this open. And it did. Why? Because this low to that high, breaking down below that, buy side and sell side, that's a balanced price range. All of this. Same thing when it broke down below this. All of this is a balanced price range. It should be if you're continuing to be bearish. For those of you that haven't heard this type of explanation, this should be very eye-opening, because now when you go into your back testing and you see this, the fact that you're aware of it, how this operates and how you can look at things like this, I mean, it's insane. Like most of the stuff that we talk about here, and this is something that we use every day. The whole idea behind balanced price ranges. I've told you guys that most of ICT's PD arrays, if not all of them, are a variation of a balanced price range. That's why they should hold. Market maker models in themselves, at the core of what they are, once it completes it, it's a balanced price range. And there's so much deeper that we can go with this, but I'll leave it there. And hopefully you guys understand that. You have something to definitely go back test if you haven't looked at this before or thought about it this way or knew about this. But yeah, so, and I guess there was SMT here. We had the Dow failing to take out this high. It's part of the reason it dropped. If you think in here too, we got run on stops. Run on stops. Shift in market structure. Was there a fair value gap in here? No. Then we got that shift. And there's that fair value gap. That's also the YouTube 2022 model. Stop run. Shift. No fair value gap, so there's no opportunity. And then we got another shift below that low with equal lows or significant lows that were available. It came back up into it and then broke down again. Okay. Those of you that are in my private group, right, you can see the razor model. Where's the stop run and what's inside that stop run, right? And then what happened as a result? You know, related to the change in state of delivery, what was happening and what PD arrays were available in that. You know, those of you in my private group who know the razor model, you could see that there too. We got this low, high, lower low. Honestly, I bet you, if we go to the 5-minute, low, high, lower low. We talked about this breaker too. We literally called this the 1 hour fair value gap being respected. Again, those of you that were live with me in my private group, you know we called this absolutely to the tick. Perfect timing. Notice what time this reaction is happening at. It's in a macro. Right, 550 macro. And then 650 macro came too. Offered more. Below the 4-hour bearish order block. Right, you could see it. It's marked up here on the lower time frame. It's just not here on the higher time frame. And then the 1 hour change in state of delivery. And then another fair value gap here. Beautiful. Okay. We got low, high, lower low. This low to that high should be a balanced price range. It shouldn't come back into that. It's also a bearish order block when you move up. So when it trades into that, what's the expectation? Only wicks can breach the 50%. If bodies start to close beyond the 50%, red flag, right? When it comes to a order block. Okay. So yeah, hopefully all this stuff has made sense. Hopefully you guys got value from today. That about does it for the indices. So yeah. And of course, this will basically be the end of the call. I'll open it up for questions. If you guys got any questions, let me know. If you guys don't have any questions, let me know that as well. Throw one in the chat if you don't got any questions. Yeah, we'll see. Those of you that may have showed up late, I encourage you to watch the whole video. We talk about a lot of things on these calls. Just watching 5 minutes of it, you're wasting your time. You might as well watch something else. But if you really want to learn how to trade, you'll sit there and watch the video, because what we do here, it works every single week. I mean, it's spectacular. Literally just got a message from one of my friends saying that he bought a house. I can actually show you guys. It's actually on my story on Instagram. So the power of trading and what we do here is unbelievable. If you have any doubt, go ask one of the students, some of the people that I tag. Go probe some of the students that are in this group that talk a lot. Probe anybody in the chat right now. Anyone that's in my private group, even, people that are just hanging out with me on YouTube, like Tony and Fancy Pilot, right? Many others to the hop on that may not be on right now. But anybody that's spent time here for a long length of time that you see commenting positively, probe them. Ask them questions. Don't harass them, because if you harass them, you should be blocked. But yeah, between the students, what they say, their testimonials, their results, and what I do here publicly every single week, I mean, you got to be an idiot to not understand that this is like obviously working out, or you're just lazy and you just refuse to vet it, and maybe you don't like ICT, whatever. But it just works. So yeah, and I hope, again, all of you guys have been getting value. But that about does it for this Sunday's call. If you guys come up with any questions, let me know. I'm always open to answering DMs and whatnot. I'm not like these egotistical idiots and maniacs on the internet. I don't leave you hanging. No question is too small for me to answer. And there's honestly no question that's too advanced for me to have an answer either, unless I just entirely don't use the concept, which is obviously possible. I don't use all of ICT's concepts. I solely use his concepts, but I don't incorporate every single concept. And I haven't backtested every single concept either. You don't have to do that. You find what works for you, something that can get you to make a decision, to trust the decision. You have a process that manages your mindset and risk and targeting and trade management. And honestly, once you can have those things and a repetitive process that works over time that you're able to prove through data and experience, then you don't really have to have any more. He's dropping new stuff all the time. I keep up with it because there's students that continuously try to watch. So I kind of got to get a feel for what's being talked about. So I do keep tabs on some of his newer stuff, but I'm not sitting there watching the entire videos anymore because I just don't have to. I do listen to Twitter Space every single week and dissect it, which I give my private group a whole archive of all of them, even the new ones. And I encourage you guys to go ahead and study them and take copious notes. Don't just Netflix and chill type vibe. Take notes like you're being talked to by, you are being talked to when he's speaking by one of the greatest traders probably to ever live. And the one trader that has probably the most students that have provably profitable results, from, the consistency that I show to all the other big names that clearly know what they're talking about. Okay, but I do encourage you guys to always listen to a Twitter Space every week. There's archives from YouTube to Spotify. I may on this YouTube channel start to show or share some of the most impactful ones that have helped me along the way over the last 6, almost 7 years. If you guys would like that, I'd be more than happy to do it. I'm starting to do it a little bit. I posted one the other day. It's one of my favorite. So check that out if you haven't seen that or heard that space, right? If you listen to it and you've heard it, you don't really have to watch it, but it's good to listen to those things over and over and over again, because you will have missed multiple things if you just watch all of them like super quick. Just like with ICT's videos, if you watch them too quick and go too fast and don't give it the time necessary to pick up the gems that are being talked about, and revisit things when you get more advanced understanding, you're doing yourself a disservice. The stuff seems to always have something new that we didn't catch before. And it's because of where your understanding is at the time of watching the content to where your mindset and knowledge is later. Your awareness changes every single week to what's important. Eventually your process won't really change, but your perception changes. What is truly valuable to you about the concepts changes after you watch a video, and then weeks after, you study intensely. If you come back to the things you watched before, even my videos, you'll realize that you missed a lot of things. And it's not your fault. You didn't intentionally do it, but we go in with preconceived notions of what we want to hear. And that's all we're really looking for at first. But then as you gain wisdom, as you gain experience, even a month from the time that you watch whatever content you're watching, when you come back to it, because your awareness has changed, even in a month, it seems like something's changed. Like there's new stuff that you're discovering or mining from that content that you watched previously. It's a very weird thing about trading, but it's true. Right? So keep that in mind when you study. But again, I'll let you guys go. Thank you for hopping on, spending some time with me. Hopefully you guys got value. Let me know if you guys got any questions. Don't forget to like the video, subscribe to the channel if you get value. It really does support the channel and tells me that I should continue to keep doing this because, I really don't have to. I already got my private group. I could just live with them. But yeah, I enjoy doing this. I enjoy knowing that I'm helping you guys. So yeah, if you could do that, like the video, subscribe to the channel, share the page or the channel with anyone you think that would get value or be able to even provide value to the conversations we have, that's always invited as well. And yeah, I greatly appreciate you guys. Right. So with that being said, God bless you. And I will see you beautiful people on Tuesday, this coming Tuesday. And it should be pretty interesting because we got PMI and this, whatever the hell that is, something that has to do with manufacturing, right? So it should be fun, right? So yeah, with that being said, God bless you. Hopefully you guys have a good rest of your week or the rest of your weekend. And I will catch you beautiful people on the next one.